So let's talk about your money and take a closer look at the state of our economy, because there seems to be a great disconnect between Wall Street and Main Street. Take today's job numbers, for example. You may have seen the headlines like this today and scrolled right past them. Employers added more than 300,000 jobs in March. That was much higher than expected. It's also the 39th straight month of growth in a row. And the unemployment rate, it dropped to 3.8%. That's all good news, right? More jobs, more money flowing into our economy. That's a win for everyone. But then there's headlines like this from earlier this week. Federal Reserve Chairman Jerome Powell wants more evidence that inflation is easing before he'll cut interest rates. Sure, there's not a direct correlation between inflation and job numbers, but that's part of the issue, right? All of this reporting about good news and bad news when it comes to our economy, it really gets confusing. So let's find some clarity. William Lee joins us now to break it down. He's the chief economist at the Milken Institute. William, what do these new job numbers actually mean to most of us?
Well, Chris, if you're looking for a job, it means that you're going to find an easier time finding that job. And if you're going to switch jobs because you want a better salary, you're going to have an easier time at that. But you're right, there is a problem with a lot of these numbers, because when you're looking for a job, you're finding that all the kind of jobs that you're going to find are in the lower wage and not so luxurious categories. They're usually in hospitality, leisure. If you're trained in healthcare, you'll find some jobs there. Or if you're lucky enough to get a government job, those are the three categories that account for most of the job growth this
Right.
month.
But does that mean that 300,000 people, they got brand new jobs? Is that what it means?
Well, that's a great question, because the survey actually has two sets of numbers. There are 3,000 new people on payrolls at companies, but the survey that asked people, "Are you working or not?" showed that more than 400,000 people have found new jobs. But it means that there could be part-time jobs. It could be that the people are holding two jobs because they're having such a hard time making ends meet.
That makes sense. So you see headlines about the job numbers, but then other headlines about record inflation and the Fed lowering rates, all this while the stock market is seeing record highs. Good grief. Are things good or are they bad, William?
That's a great question. As an economist, I sometimes scratch my own head and say, are things getting better? If they're getting better, why is the Fed so worried about this robust job growth? And the usual answer is that, well, the Fed really wants people to contain their spending. They want to moderate spending so that we have enough stuff to go around without having to raise prices. And so once we have a high level of employment, people get a lot of money in their pockets. And as Americans, the one thing that we're good at is spending money. And so what the Fed is worried about is that if we spend money too quickly and too much of it, it's going to push up prices. So that's the bad news that the Fed is really worried about, that they can't lower interest rates and let people buy houses more cheaply with lower mortgages until we have a clearer sense that inflation is going down to 2%, which is their target.
So what's the solution here? How do we fix it?
Well, I think one of the things that we have to worry about would be the kind of jobs that are being developed out there in our economy. The United States is still the best place in the world to invest money. So global investors all over the world are putting money in the United States. But the kind of jobs that are being created in the economy, especially in the post-COVID period, have been relatively low-wage, low-paying jobs. We find that household incomes have actually declined by almost 5% since 2019, whereas in the 4 years before that, household incomes rose by 13%, even adjusted for inflation. So you get a sense that people are right to say, just things just aren't as good as they used to be. And the reason why is inflation. My income just isn't keeping up with prices.
Yeah, we're all feeling it. William Lee, thank you for your time tonight.
Thanks, Mike.